Hey guys, David here. Welcome to Digital Outlook. In today's video, we're going to tackle one of an investor's greatest hurdles, market volatility. So why don't we get to it? Hey guys, thanks for tuning in today. I hope you're having a good Wednesday. I'm really glad you're here, and I'm hoping that the information I'm providing is helping you out. So I'd like to share with you a little bit of my personal crypto story because it kind of relates to the topic we're on today. So I got into crypto in around March of 2020, right around when the whole C-19 thing happened. At that time, I was working with the tax department, and the government was rolling out all these extra benefit plans to help folks financially during the crisis. And at that time, I could kind of see that, hey, look, my purchasing power of my savings is probably going to get decimated here with all this money printing. So I decided that I would take my savings and I would go out and I would buy some physical gold and silver just to protect the purchasing power. Well, there wasn't any. I mean, every dealer I went to, they had none. And so I went back home to my wife. I said, look, nobody has anything. And we're like, okay, so now what? Well, as it turns out, my wife was scrolling through YouTube and she came across this channel that had this course on blockchain. And so she said, hey, maybe we should take this course. It was about $200. I said, okay, fine. Well, why don't we take the course? And it was through this course that we actually got introduced to the crypto markets. Well, fortunately for us, during this time, crypto was going through this massive crash and people were just panic selling like crazy. Well, we didn't know any better, and we just looked at this as a perfect opportunity for us to get in. So we took our savings, we bought a few Bitcoin, we bought some Ethereum, we bought some XRP, and we started dipping our toes in this space. And over time, we just learned more and more about it. We dollar cost averaged, and we became more strategic about our investments. Now looking back, I can see it was one of the most volatile times crypto has ever experienced. But those initial investments changed our financial future forever. And we have never looked back. Well, right now, guys, we're going through another one of those periods of extreme volatility. And it can be a source of amazing opportunity rather than negativity for you. And I'm hoping the information that I give you today in this video will help you to make that switch. So guys, we're going to look at a definition for market volatility and kind of see how we can understand what it is and some of the reasons why it happens, especially in this crypto space. Then we're going to take a look at a couple strategies that'll help us mitigate this market volatility in our investing and our trading. Then we're going to finish it off with a little deeper technical analysis than what we normally do. On this page, we have what is market volatility and how should you manage it. So what I want to pull off of this page is just this volatility definition. It says here, market volatility is the frequency and magnitude of price movements up or down. The bigger and more frequent the price swings, the more volatile the market is said to be. Well, if you've been around crypto for any length of time, you already know how volatile this can be. We see swings literally 20, 30% up, down. One day you're up 20, 30%, the next day down, and vice versa. But it's also because of that same volatility that we see the 10x, 20x, 100x blow-off tops that literally give you life-changing wealth. So one strategy that's going to help us mitigate the impacts of this volatility right off the top is going to be to expect it and to look at it as an opportunity to benefit us up or down. So let's take a look at this page from Capital Group about understanding volatility. It says the ups and downs of being an investor. Not so fun fact, the stock market and any market is going to rise and fall. Some dips will be minor, some will be major, and some might make you nervous about the very idea of investing. But even the most extreme fluctuations don't have to be fatal to your finances. You can plan for the ups and downs and invest in a way that will help you ride it out. So this is where you develop an investment strategy, and I'm going to show you a couple basic strategies here, but there are also some really advanced strategies as you progress. You can learn to trade the market with leveraged longs or short the market, and either way, whether it goes up or down, there's opportunity for you to profit. So let's take a look at what causes some of this crypto volatility. Well, here we can see some key reasons for crypto volatility. Bad news. This market is very sensitive to the sentiment that is out there. So when China comes along and says, hey, we're banning Bitcoin, everyone gets nervous. Price of Bitcoin drops. And they've done that, by the way, about 10 or 15 times. So when China says that now, it doesn't have as much of an impact on the market as it used to have. But look at what happened with Terra Luna recently. Those of you that may not know, Terra Luna was supporting a stable coin that is pegged to the US dollar called UST. Well, it got caught in a death spiral and the whole thing collapsed. Those kind of reverberations have impacts on the entire market. Okay, another key reason for crypto volatility that they have labeled down here is whales. Well, whales are the guys that have huge bags of crypto, and a lot of times these are these Wall Street guys like we shared in our video about Don't Get Played. And what they'll do is they'll manipulate the market by dumping a whole bunch on the market at one time, creating a supply and demand shock. Now, their hope is that the weak hands will sell and they'll be able to amass all that crypto really cheap. And you'll see a bunch of guys who have their positions on the crypto exchanges with their stop losses getting triggered, and boom, it's automatically sold and gone. Now, another thing that affects this volatility in crypto exchanges is the perceived value. And you can really see this in the meme coins like Dogecoin or Shiba Inu. There's not much utility, if any at all. But because there's this perceived value, a celebrity gets up there like Elon Musk or somebody and they pump it, a lot of people will go in and they'll buy it. And it also works in the reverse where some of these guys say, hey, you know what? Well, I'm not going to be touching that anymore. And boom, down it goes. And that is called sentiment. And when the sentiment changes, the value changes. So here we have cybersecurity concerns as a key for volatility. Look, if a big exchange like Coinbase got hacked and a bunch of people lost all of the assets that they had staked on there, I'm telling you, that would have a massive impact on price. Another one, tax treatment and regulations. This always has an impact. A news article will come out, oh, the US is going to put out some new regulations on cryptocurrencies, which is happening actually this week, and that as well affects price. Now, all of those things contribute to the volatility that we face in these markets. So I think next to expecting volatility in the markets, the best investment strategy is dollar cost averaging. Well, why dollar cost averaging? Well, because dollar cost averaging divides up the total amount that you plan on investing across periodic purchases. And so at that way, it's not really price dependent because your purchases are occurring regardless of the asset's price and usually at regular intervals. Look, on payday, I'm going to take 10%. I'm going to buy a little bit of crypto or month by month or whatever. Well, this strategy takes away a lot of the detailed work of attempting to time the market in order to make purchases at the best price. Dollar cost averaging says here it's also known as the constant dollar plan, but it's probably one of the best and most successful ways to invest that actually helps you mitigate the volatility of the market. So another strategy is diversification. So here I have an article, How to Diversify Your Crypto Portfolio and Why It Matters. Without a doubt, cryptocurrencies are profitable investment options. They have historically outperformed other assets, and by the way, Bitcoin has outperformed every other asset class, bar none, over the last 10 years, producing millions of successful investors in the process. As a result, many have shifted their focus to the crypto space, including leading crypto coins such as Bitcoin and Ether in their portfolio. So how do you go about diversifying? Well, maybe the type of cryptocurrency. So you have like a store of value like Bitcoin. Another one you might want to hold on to is Cardano as a smart contract platform. Yesterday I talked about VeChain, and VeChain is in the logistics and supply space. And then you've got different ones like Hedera Hashgraph and XRP and XLM and the ISO 222 tokens. This helps you with price fluctuation. Sometimes when one asset is down a bit, the other one is up a lot. And it also exposes you to the potential. If you pick one or two major winners, they can literally be the catalyst of changing your life, even if the other 8 or 9 turn out to be losers. Having said that, guys, in future videos, I'm going to go over my entire portfolio with you. But suffice it to say that the assets that I'm doing these deep dives in are ones that I am also personally invested in, and some of them quite heavily. So I want you to know that I'm not going to present something to you that I actually don't have skin in the game as well. So I'm taking these risks right along with you, those of you that decide to actually do it. Now remember, hey, not financial advice, but this is what I'm doing. So guys, let's do some deeper TA than what we normally do so that we can actually get the pulse and the temperature of the market. And today we're going to actually look at Bitcoin, the granddaddy of them all. Okay guys, here we are on Binance, and this is Bitcoin on the daily chart, and I'm just going to drop in some support and resistance lines here to kind of help us see some data. So let's just drop one right in here, right about there, and bring that down just a tad right there. Okay, so this range right in here was around December of 2020, January of 2021. And here you can see we broke through that level at the 2930K. And at that point, it started acting as very strong support. There's 1, 2, 3, 4, 5, 6. Let's zoom in over here so we can see on the daily. There's 7 times it was support, and then we fell through it just a little bit, and it acted as resistance right in there, and then came back up at support again, down a little bit, so we're ranging in here, and here you can see we're just acting as support. So this is a very extremely strong level of support right now at that 29-30,000, and we're trading right now ranging between about 28, 29 to 30, about 32,000 in that range. But what's actually happening here, guys, is we are actually working on an impulse wave down. So here we have our 1 wave. There's our 2 wave. This is our 3. There's our 4. And right now we're just trying to find the bottom, the 5. So if we could have already hit that bottom, and then we could be going back up. But if we were to potentially, and I'm going to show you on the weekly where I think we might go if we do hit, but if we were to break lower, I think it's going to hit somewhere down here around the 25,000 range, right in about here. And let's draw another line in here just so you can see the area that I'm talking about. So, okay, I think right in about here is where we are. So right now, you're seeing all of this consolidation going on, right? You're seeing all this consolidation going on right in here. And are we going to pop up or are we going to drop down? Well, guys, this is normally like what would be called a continuation pattern. And you can see that over here as well, where we had come down and then we're just chopping along, and then we drop down. So let me just take this out right here and let's zoom into this just a little bit more because there's some other stuff I want to show you in here. Okay, maybe like that. Okay, so right now we have a bit of an uptrend going on right in here, like a bit of an uptrend going on. And we've formed ourselves a bit of a wedge. Let's just drop this down in here and I'll show you what's going on in here. You can see this pretty clearly. So right now, we're trending in this wedge, and like I said, between 28 and about 32. And you can see, man, it is getting very tight. So we are either going to pop out of here, and we're gone, and this is the bottom back here, or we are going to fall through this. And if we do fall through this, I think we're going to see a lot of support down here at the 25,000 range. Now, could it drop further? Yeah, it could. I actually think it won't. I think it'll stop here at the 25 area and then bounce up from there. And the reason why I think that is because here you have the, this is on the weekly. And let's open up these EMAs here, the 20, the 55, and the 200. So here we are. You can see like we're way far away from these moving averages, which, you know, is actually, that should say that we should be moving up, or they're going to come down to catch us. But look what's down here. This is a 200-day moving average. Look where it's sitting, guys. It's sitting right around that 25,000 range. And I think if we do roll over here, we're going to catch support right around there. And what I see here overall is just a big, this is what I'm seeing here. This is just a massive A, B, C correction, and we're just trying to find our bottom. But once we find that bottom, and I think we're right close to it, we're going to hit it about right there, I suspect, and that I think is going to happen within the next few days, if not this week, next week. And from there, I think we're going up. We're going to start going back up. I think what you're going to see is we're going to just trend up here like this. We're going to come down like that. And then we're just going to take right back off. And we're going to be looking at some all-time highs. Now, that's what I suspect. Right now, we're pretty low on the RSI. But if we did drop, I think it's going to be a little dip. I think it'll touch down just under here, just like it did over here, and then I think we're going to take off. Now, the reason I chose Bitcoin to do this review is because when Bitcoin sneezes, the rest of the altcoins get a cold. So if we do see this drop in Bitcoin, then yes, our altcoins are going to feel a pinch, but I think that the recovery is going to be immediate. I think what we're going to see is a big V-shaped recovery, just like we're seeing right down in here. And then at that point, we're going to see our next and final leg up in this cycle, and we're going to get that big 5 wave. When will that happen? I think that this move is going to be fairly quick in here. How long will this take in here? My guess is it's going to happen by the end of the year. That's what I think. So guys, this is the video that I have for you today, and as always, I'm not a financial advisor, and this is not financial advice. It's for information and entertainment purposes only. However, if you found value in it, please hit the like and subscribe and tell your friends and family. And in the meantime, and in between time, stay safe, be blessed, and I'll catch you in the next one.